Now we're going to talk about probably one of the most important technical concepts you're ever going to learn as far as trading is concerned, and that is about support and resistance. Support and resistance is the foundations upon which every successful trading system is built. Okay, support and resistance allows you to identify high probability areas where you kind of know that the market is going to do something. It may not always be what you want it to do, but it's going to do something at those areas. So if you can anticipate movement at a particular level, then you're always going to put yourself in a great position to be able to make some money on it. So what I want to do in this video here is just talk to you about how we go about identifying the support and resistance levels. And then in a later video, we'll talk about how you can use them to build a trading strategy. Okay. So if we look at a chart, we've got the Aussie New Zealand here. Let's pick a different chart, because I know we've already looked at the Aussie New Zealand. You can see here on my chart, I've already got support and resistance levels in, right? So this is how important they are. But let's start from the beginning. Get rid of that. So support and resistance levels, what are they first of all? Well, they're levels where the market has been in the past, okay, and it's a place where the market is going to turn around, where price is going to turn around. A support level is an area on the chart like this here, for example. And let me put that in there for you. So it's an area on the chart where there's been a lot of selling. So you can see the market has moved from this level here and it's moved down to this area here. So there's been sellers, and suddenly a wall of buyers come into the market and the price can get no further. All right, then the price turns around and it goes in a different direction. That's what's known as a support level. So you've got buyers supporting the markets up here. A resistance level is exactly the opposite. So a resistance level is an area where you've had buyers in the market. So let's take this, for example. The market's moving up, up, up. People are buying the market. And then it can go no further and it turns around and moves in the opposite direction. That's what's known as a resistance level. So we'll put that in there. And what's happening in the markets is that the buyers have met a wall of sellers, and the sellers are more aggressive than the buyers. So they're willing to push the price further than the buyers are. So the buyers want the market to go up, but the sellers say, no, 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 we want it to go down. And they're more aggressive in the way they go about it. And hence the market then goes down. So that's great, right? That's a support or resistance level. You know what that is conceptually, that's fine. But what about trading it? How is this actually useful to us? Well, let's take into account these levels here. So I've got this resistance level here, right? And one of the things what we do when we're identifying support and resistance levels is we only want the major levels. Okay, we only want the levels where the prices come up to it and you've seen a complete reversal. So you've seen the market swing up to a point and then swing back down. We're not looking at areas where the market's come up to the point, gone sideways a little bit, pulled back a bit, gone back up to the level, pulled back. Do you know what I mean? We don't want that sort of messy price action. What we're looking for is distinct levels that, it's not up for debate. If you ask anybody, is this a support level? They would have to say yes. If you need to do too much thinking about it, then the odds are that actually the support or resistance level doesn't really exist and it's not a strong enough level. Okay. And whilst we're on the topic of stronger levels, you're going to find that levels on a daily chart or a 4-hour chart are going to be stronger and hold up more than levels on, let's say, an hourly chart or a 15-minute chart. All right. So the support levels that you identify on the higher time frames will be stronger levels and will have more merit than those that you find on the lower time frames. But back to how would we go about trading them? Well, once you know that there is a support or resistance level in there, so let's look at this resistance level here. The fact that we know that this is resistance, we can then wait for price to approach this level again at some point in the future. We don't know when, but at some point in the future, we're expecting that price will go back to that level. When it comes back to that level, we can then use a price action setup, which we'll be teaching you later on in this sort of mini video course here. You can use a price action setup to get involved in the trade in the opposite direction of the trend. So the market's been moving up here. It comes up to a resistance level. You can say, well, I've seen that's been a resistance level in the past. Therefore, it's completely possible that the market will turn around from here and go the opposite direction. And you could take a sell from this sort of area here in anticipation of the market moving back down. When the market then moves back down, so we've got this previous level of support over here, okay, we can then start anticipating a bit of a move. So we'll look at that level of support and say, well, the next time the market gets down there, it's completely possible that it could turn around, right? And if it turns around, I can then take a position in the direction of that bounce and look to make some money. And what happens? The market comes down here, and sure enough, you get a little bit of price action and the market bounces back up. It doesn't go all the way to the top of the range here, and that's, we can't have everything that we want, but it does give you enough for a good risk reward trade there. So even if you're going for like a 2 to 1 or a 1.5 to 1, you'd have your stops somewhere below the lows here, and then you would have your target somewhere around where this moving average is. That's just one example of a strategy. There are many out there that you can use. I'm just trying to make you aware of a few things here. Okay, so that's how you play support and resistance levels. Now, support and resistance levels, they come in many different forms. So what I've demonstrated to you here are the horizontal lines of support and resistance, but you can also get sloping lines. These things are called trend lines, okay? And trend lines can be great technical tools, because whereas with the horizontal line, we have to wait for the market to come back to that exact level. There's no real way of projecting where new levels may be created. But by using a trend line, you can do exactly that. So if we were to use this, for example, so I've got a trend line. I draw this in down here. Oops. So from the top here, and I start drawing it in down here above the tops, because we're in a downtrend there, okay? Look at what I'm able to do. So whereas previously, with the horizontal levels, it's got to be at a specific level in order for me to be able to take the trade, right? Because it's a horizontal level. With a sloping level, I can then put in a line here. So that basically connects, and let's move that in a little bit closer. That connects the highs of the candle. So this is one place. You need a minimum of 2 to be able to create a trend line. The market then moves away, and then it comes back again. But it doesn't come back all the way as high as here. All right, it actually comes back and it bounces off of this trend line. So can you see how the trend line is helping you project into the future where the price may turn around? And it happens again here. The market moves down, rallies back up. And again, where does it turn around? At the trend line. Right, so you don't have to wait for the market to come all the way back up to your resistance level, all the way down to your support level. If you've got an opportunity to use a trend line in there, then it's a very, very effective way of getting into the markets. And trend lines, they don't just have to be used to identify trading opportunities. When we talk about the strategy later and multi-time frame analysis, you can actually use trend lines as sort of entry signals to get involved in the trend, in the direction of the trend, by using a lower time frame. But a little bit complex right now. We will get into that later on in the video course with some of the more advanced videos and the strategy videos. But right now, hopefully you've got a good idea of what support and resistance is. You've got a good idea of what a trend line is. What I'd recommend you do is go away, pull up a chart, and yeah, basically just have a bit of a play. See if you can put all of this into action. And really just look at the power of it, because trading is very much about that. You have to commit to something. You have to believe in it. You have to own it intellectually in order to find any real use of it. If it's just kind of like, I saw this guy, he did this video on support and resistance. It kind of looks good, but I don't know. You never will use it, and you'll never get the full potential out of it. Okay, so go away, prove this to yourself. Show yourself that this stuff works. And remember, only pick the most obvious levels. Don't sit there and pick and settle for anything, because you will come unstuck. It won't be as powerful. So pick the most obvious levels. If you need to debate it, it's not there. It's as simple as that. Okay? I hope you enjoyed this video, and I'll catch you on the next one.